Hello YouTubers, Alaska Prepper here. Ladies and gentlemen, some people don't want to hear the truth and therefore convince themselves to only digest information that in their opinion comes from a so-called expert and not from a YouTube personality that puts out his thoughts and ideas as to what is happening and what may be happening in the future. In other words, some only trust what the mainstream media puts out when interviewing their pundits. For those of you that need validation of what I've been harping about for a good while now, I've decided to share this article with you. As I've stated in the past, the mainstream media will only inform the people once a crisis is at hand, and very rarely do they give us advance warning to the storm that is ahead. You see, for the last several years I've been saying that we need to spend our fiat currency in things that bring value to our lives, because this is a better way of preserving your wealth rather than sitting on a pile of cash that devalues every day while it sits idle in your bank account due to inflationary forces. As you can see, I've practiced what I've preached via my many videos showcasing what I like to convert my wealth into. Now we have Ray Dalio, a renowned billionaire investor, and this guy's actually a pretty good guy, ladies and gentlemen. He tells it like it is, and he's saying the same thing, just with fancier words than I can. And what does he say? Well, let's take a look. Ray Dalio has long been known for his disdain of holding cash amid rising money printing and inflation, which they're both one and the same, ladies and gentlemen. Money printing and inflation is the same thing. But the billionaire investor now says bonds may be a bad bet as well, or any US dollar denominated asset for that matter. The economics of investing in bonds has become stupid, he said Monday in a post on LinkedIn. Rather than get paid less than inflation, why not instead buy stuff, any stuff, that will equal inflation or better? For example, ladies and gentlemen, if you buy a can of corn today, more than likely in a year from now, that can of corn would have gone in price a lot more than what the Fed says the inflationary and or the CPI rate is. He thinks it may even be a good time to borrow cash to buy higher returning non-debt investment assets in a new paradigm he said could be characterized by shocking tax increases and prohibitions against capital movements. This is pretty much capital controls, ladies and gentlemen. The government telling you, you can't transfer this money from here to there, you can't invest on this, you can't do this. Pretty much I'm telling you what you can and can't do with your money. With rising amounts of government debt and classic bubble dynamics among many different asset classes, Dalio recommends a well-diversified portfolio of non-debt and non-dollar assets. I also believe that assets in the mature developed reserve currency countries will underperform the Asian emergency countries, to include China, adding that Chinese bond holdings by international investors are rising fast. I believe cash is and will continue to be trash, i.e. have returns that are significantly negative relative to inflation. So it pays to A. borrow cash rather than hold it as an asset, and B. buy higher returning non-debt investment assets. There's just so much money injected into the markets and economy that the markets are like a casino with people playing with funny money. If history and logic are to be a guide, policymakers who are short of money will raise taxes and won't like these capital movements out of debt assets and into other storeholds of wealth assets and other tax domains, so they could very well impose prohibitions against capital movements to other assets, i.e. they can tell you, hey, you can't buy gold, just like FDR said back in 33, 34, and now the new big thing, Bitcoin cryptocurrencies. So ladies and gentlemen, governments can pretty much pass any laws they want. The question is, will we comply with those laws? These tax changes could be more shocking than expected. The United States could become perceived as a place that is inhospitable to capitalism. And yes, ladies and gentlemen, I highlighted this, capitalism, not crony capitalism. So those of you that think that we are governed under a capitalist market or economy, we are not. It is what is called crony capitalism, where the big players buy off the politicians via lobbyists so that they can get rules and regulations passed in their favors and not in the favors of the middle class or the mom and pop shops. Because of limitations of how low interest rates can go, bond prices are close to their upper limits in price, which makes being short them a relatively low-risk bet. Watch central bankers' actions, i.e., see if they increase their bond buying when interest rates are rising, led by long-term interest rates, and then when markets and the economy are strong, because that action would signal that they are experiencing supply and demand problems. Also, watch the rates of change in the injections of these stimulants in relation to the effects they are having on the economy's vigor, because the more stimulus that are being applied per unit of growth, the less effective they are and the more serious the situation is. So ladies and gentlemen, what he's saying right there is that the more stimulus that's being injected into the economy or into the markets, the less of an effect that they're having on the growth of the stock market or the economy. So eventually, it doesn't matter how much money the Fed/government prints, is going to end up having no effect. It's like when someone is addicted to something, right? Let's say they're addicted to a certain drug. The first time they ever take it, they get a really, really big high, right? Or a really big boost in whatever feelings they get when they do that stuff. Then the more and more that they do it, the more and more used to it that their body becomes. And eventually, it doesn't matter how much they give themselves, it will have very negligible effects on their body. So then they move on to something that's stronger and more potent so that they can get that same feeling with something else, because what they were using before just doesn't work. Well, the Federal Reserve is at their last leg. They can't find anything else. They have no more tools in their tool bags to be able to keep this economy and stock market propped up. Now they're thinking about going into negative interest rates, which the real interest rates as it sits now is negative, meaning that if you hold on to your dollars, every year they're going to go down in purchasing power. That is a real interest rate of negative yield. They can go to negative interest rates on bonds and all these kinds of things, but ladies and gentlemen, as I've always said, nature always finds its mean. They are running out of moves, and here you have it. Don't listen to me. Take a look at what Ray Dalio just said. He said that cash is trash. And you know what? Unfortunately, I have to agree. Having said that, thank you very much for joining in. I hope you have a good day today. Thank you very much to all of you that came by yesterday and stopped off at the Alaska Prepper News channel for our live stream on that channel. It was a great success. Had a great time chatting it up about finances and the economy and things like that. So if you're not subscribed to the Alaska Prepper News channel, take a look at the upper right hand corner. I'll provide you a link to that channel. Go ahead and go over there and subscribe and join in on the live streams. We're going to have one every Wednesday on that channel instead of here on the Alaska Prepper channel. And like I said, we had a lot of fun. Hope to see you there next week. Remember to be good to each other. When good people do good things happen. Remember to reach one, teach one, and repeat. If we all did this, the world would be a better place, and you know that it will be a better place. Many blessings to all of you and your families. This is Alaska Prepper. I'm out.